All right, so welcome back again. We'll be looking at the excuse me, someone is talking. All right, so we'll be continuing with the final account, and as I said earlier, that final account is also in the second semester. Almost all the topics in second semester is application of the word final account. So if you don't get it here, it means that you are going to struggle with it in second semester when we start with the partnership, the manufacturing and the rest, right? So make sure you get it once and for all, and then you practice. In accounting, practice makes perfect. So if you don't practice, you sleep all day without practicing. That would not make you appreciate the course. So please practice, solve plenty questions, and ask plenty questions. All right, so final account. I'm sure you're able to see my screen. All right, so under the final account for your level, or for this semester, it will be centered on the income statement, the preparation of the income statement, and the preparation of the statement of financial position, the income statement or the statement of profit or loss, and the what, and the statement of financial position. These are the things that we'll be doing for this semester, or for your level, in fact, the level 200, whether first semester or second semester. Once you get to level 300, that is where we'll add other topics or other parts of the final accounts, like that of the equity and the rest. Okay, so basically, we'll be looking at these two things. We'll be looking at these two things. All right, so we have a format for each of them. We have a format for each of them, right? We have a format for each of them. And this is basically the final account of a sole trader. So here, it is centered on a sole trader, right? A sole trader. A final account for a company would be much more detailed than that of these, right? Would be much centered than that of these. So now, in the first question will be, what is a financial statement? What do we mean by what a financial statement is, right? So financial statement looks at or is made up of the income statement and the statement of financial position as at, I mean, for your level, right? We have to look at the account that a sole trader will prepare at the end of its operations as a business, right? So if you take the income statement, if we take the income statement, what does it entail? So the income statement looks at a firm's revenues and what? The firm's revenue against its expenditures, right? Revenues against its expenditures for a particular period of time, right? So why do we even prepare the income statement? To be able to determine whether the firm is making profit or loss. To determine whether the firm will make profit, and that is to say that it looks at the performance, the financial performance of the entity. It looks at the what? The financial performance, whether the entity will make what? Profit or loss. So comparing its revenue against its expenditure to determine whether there will be a profit or loss for the period, and it actually shows the entire what? Financial performance. So for a particular what? Period. You are doing this for a particular period. Okay, so now let's look at the format of the income statement. What is the format? There is a format that it follows, right? So I tell my students that the income statement is like what we know. The selling price, this formula that we learned from our basic mathematics, selling price minus the what? Cost price should be equal to what? Your profit or your loss. So this is what the whole income statement is about. Your selling price minus your cost price, then you're going to get your profit or loss, right? If you deduct all your costs from your the sales, it means that you are going to get your profit or your loss. So that is basically it. So we are going to base on this to prepare our income statement. To prepare our income statement. So sometimes I expand this format by saying that selling price minus cost price is equal to, instead of writing profit, I say your gross profit or your gross loss. So gross profit or your gross loss. If you have any gross profit or gross loss, you add other incomes. So I plus other incomes. If you have other incomes like discount received, commission received, rent received, any discount that you get, any income you get from other businesses, any income you get from what? Other businesses, not the income that is directly related to what you are doing, but maybe other things that you are doing. Maybe you've rented an apartment. As a business, we are having 2 apartments. We are currently using 1 apartment for our business or for our daily operations. So we've decided that we would rent out the other one so that we can generate some income from it. So that income that we generate from the renting of the apartment becomes other incomes. So that income will be added to our gross profit or gross loss. And then now what we do is that we are going to deduct the expenses. Any operating expenses would have to be deducted, right? Any operating expenses such as any salaries and wages that you pay to your employees, any insurance that you pay to your for your employees, or any other expense, normal general expenses that you incur, right? Then this would lead to your net profit or your net loss, right? Net profit or your net loss. So the gross profit, after you have done some adjustment, that is by adding the income and lessen your expenses, whatever you get is your actual profit or your actual loss, right? It's your actual profit or actual loss. So this is basically the format that I use to prepare the income statement. So this will guide you in the preparation. This will guide you in the preparation. So I would start with my selling price. Now I'm starting with this selling price. So that is the format. So sales. So I have my Ghanaian cedis. So sales, that is the first item. The sales is actually what the revenue that you generate from your normal operation. So the sales or revenue. The sales or your revenue, that is the income or the revenue that you generate from your normal operations. Now, or from your normal business. Now, yes, this is your normal sales, but it could be that after the sales, some customers saw that, oh, the item that they ordered from you was having some form of defect, right? Maybe the color that they wanted, you didn't give them the actual color. So as part of it, they would have to return it to you, right? Because you didn't give them what they wanted. They were asking for, maybe they told you that they want red color, and you gave them yellow color. So you see, when they sent it and they go home and they check, they realize that, oh, it was yellow color that they gave to us. So they have to return it to you, right? And I'm sure when they return it to you, it will definitely reduce our revenue that we have, because once they return it to you, it means that you are going to refund them their money, right? So if you refund them their money, it means that our sales revenue would have to fall, right? It is not always the same. It is not always the case that uh, people have to return part of the goods, right? Sometimes, right? So if it happens, it means you're going to deduct it from our revenue. So that is our return, less return inwards. So here, I always say that once you are doing accounting, you put yourself in the shoes of the business, that you, the one doing that, solving the question, is the business. Once you think that you are not a business, then you might do opposite transactions. You might enter opposite transactions, right? So you think that you are the business. So once we return inwards, it means it is coming towards us. So here we are going to learn the return inwards because they have returned part of the goods to us. And once they return part of the goods, it means our returns or our revenue would fall short. So it will reduce. So once it reduces, whatever we are getting is our net sales or the net revenue. This is the net sales or revenue. So net, I always say that the net is the actual. The net sales is the actual sales. The net revenue is the actual revenue, right? Because that is after we have deducted anything that we are supposed to deduct, we are getting the actual. This is the final actual figure. So you can see some questions, there is no returning words, or there are no returning words in those questions. Why? Because it means that question, customers did not return some of their goods, right? It is not always the case that customers will return the goods that they have bought from the entity. So once you don't see returning words, it is not by fault that it should be in the question, right? It is not by fault that it should be in the question. Okay, so now, ladies and gentlemen, we are done with the selling price part. We are done with the selling price SP. We are done with that. Now we are moving on to minus. The next thing is the word minus. So the minus, I would write less. This is the minus, less. So that's the minus. I'm done. Cost price. So the cost price, here I would say the cost that is associated with the sales. So cost of sales. Cost of what? Sales. The cost that is associated with the sales becomes our cost of sales, right? Or some people can say that cost of goods sold. Cost of goods sold. So the cost of goods sold, usually when there is no wages, then the cost of sales becomes your cost of goods sold. But once there is wages alone, standing alone, wages affecting the trading, then that would will be added to the cost of goods sold, and we are going to get our cost of sales. But if there is no wages, then the cost of sales is the same as the cost of goods sold. All right. So, income statement in high school was known as the trading. In high school, it was trading profit and loss account, right? Here it is known as the income statement. So, trading profit and loss account. All right. So now we are coming to list the items that are under the cost price or the cost of sales. So what are some of the items that will be under the cost of sales or the cost price? So I'm sure that if you are, so let's, okay, we did sales department, so trading. Let's say you are operating a provision shop. I'm sure currently we are in 2026. I'm sure the items that you were not able to sell in 2025, when we come to 2026, I'm sure you throw them away and then go and buy new items because we are in a new year. So you have to get new things to be able to sell to our customers.
No.
Right? I'm sure we will throw them away. Right? Because
No.
they are old things. And
No.
we are in a new year and we want new things.
We will not throw them away.
We will not throw them away.
Yes.
Why?
Definitely. The goods are not spoiled. They are still in good shape. So then we need to sell those goods. We need to use those goods to start up the new financial period.
Oh, okay. It means you not throw them away, but you since they are in good shape, you can still sell them to our customers. Just that we were not able to sell to them in the previous year, right?
Yes.
Okay. So I'm sure we are all following. So it means that this year, as we are starting 2026, all the products that we were selling in 2025 that we were not able to sell, we are still in that business, right? It means that those are the items that we will even try to sell first before we go and get additional ones, right? Because we can see that since they are in good shape, then there is no need to throw them away. We have to what? Continue to sell them. So we will starting with them, which is the opening stock, or inventory. Opening stock or the opening what? Inventory. This opening inventory is the previous inventory from 2025 that we were not able to sell. That is the balance brought down, right? The balance brought down from 2025 that we were not able to sell in 2025. We are going to start selling them in what? In 2026. So those are the items that we will start with, right? So we will start with them as opening stock. So the opening inventory will come. Now the question is, will this opening stock or inventory will it be enough for the whole year? Will this opening inventory would it be enough for the whole year 2026 for us to sell only this?
No.
It will not be enough. It will not be enough, right? So since it will not be enough, then what do?
We buy more.
We are going to buy more, right? Add purchases, right? Add purchases because this opening will be some like it maybe it will not even get to 3 months in the 2026. Then you will sell them. So we need to buy more stock inventory so that we will not run out of what inventory. So we need to go and buy more. So here the whole thing is like a storytelling, right? Once you are able to say the story, then it becomes easier for you. right? Once you see the story, it becomes easier. The whole thing is very simple. So add purchases, right? Add purchases. Let me see if I can use three currencies. Let me see if I can use the three Ghana cedi. But if you start solving questions, I'll use only two because I'm in a haze. But for here, let me use three currency. So I mean the Ghana cedis will be three columns. Three columns. Let me use three columns. So let me bring the opening inventory here. So now that we have the purchases, it could mean that I'm sure once we go to our suppliers to purchase the inventory or the stocks. So here it means we are not a manufacturing entity. Here we are a trading entity. It means we buy and sell. We buy and what? Sell. We are not a manufacturing entity, but then we are a trading entity. So we buy and sell. So once we buy these purchases, I'm sure maybe we go to the market, we buy them. Once we buy it now, then the items will vanish from wherever it is and then get to the business automatically, right?
No.
If you buy the items, won't the items vanish there and then get to the business automatically?
No, okay.
Oh, okay. So what happens?
We definitely transport.
Transport. You transport.
Okay. So it means that we will transport them to what? To the what? To the business, right? To the entity, to where your premises are, right? We'll transfer the goods to the entity. So now it means we'll be incurring additional costs for that, for transportation, right? So who can tell me what is the name for the cost that you incur in transporting the goods to the business or to the entity?
Carriage inwards.
Inwards.
Carriage inwards. So we are going to add our carriage inwards, which is the cost of transporting the goods that we purchase from our supplier into our business. Now, is it compulsory that you always incur carriage inwards? What if someone gives you free delivery? Maybe your supplier that you purchase from them, they have a policy that once you buy from 10,000 and above, you get free delivery. And you also purchase some about 20,000. Is it compulsory that you get carriage inwards? Is it compulsory that you incur cost of carriage inwards? Hello?
No.
Yes, I think that if they give you free delivery is free. That is if you order above 10,000 and we've ordered 20,000, it means you are going to get delivery for free. So we are not going to incur any carriage inwards cost. Therefore, the carriage inwards portion would not reflect in that particular instance. So it means it is not compulsory to incur carriage inwards. So if you see a question and there is no carriage inwards, you proceed. It could mean that the question, they had free delivery, right? That particular entity had free delivery. So there is no need to incur any carriage inwards cost, right? So it is not what? Compulsory. It is not what? Compulsory. Okay. Now, once the goods get into the business, right? Once the goods get into the entity, now you do your sorting out, and now you did your sorting out, and you realize that some of the goods were in bad condition. They were not the ones that you actually wanted. I'm sure you still keep them, right? Will you keep them as a rational businessman? Will you still keep them?
No. No.
What do you do?
You return them.
You send
You
them.
return them. You return them back to the supplier. That please, oh, this is not the one that we ordered. Like how your customers also return the good that you sold to you. This is also an instance where you also buy from your suppliers. You also return it to them that, oh no, please, this is not what we wanted. Right? So that would what reduce your cost, right? That will reduce your purchases cost. I'm sure it will reduce your purchases cost, right?
Yes.
Yes.
So we are going to let our return.
Out.
Return outwards. Listen to the name outward. It is going out of the business. So I am in the business. Outwards means going out. Once to always put yourself that you are the business, put yourself in the shoes of the business. So return outwards. And this return outwards will reduce, right?
Yes.
So once you do this, what are you getting? You are getting this amount. What is the name given to this amount? What is the name given to this amount? Those who said they read accounting. What is the name given to
Cost
this
of
amount?
goods available for sale.
Really?
Google.
Okay, someone else will try. What is the name given to this figure?
Net purchases.
Net purchases. Net purchases, like how you have net sales. Once you deduct the return out or inward, you are getting net sales. This one too, we are only dealing with the purchase. You bought purchase, you add the transportation, now you return part of it to the supplier. It means that whatever you are getting is your net purchases, the actual purchases, right? This is the actual purchases that you have. So you add the actual purchases to the opening balance inventory, right? Opening inventory or the opening stock. I'm adding the new purchases that I've made, the actual purchases plus the inventory that I purchased. If I add the two, then I will be getting something. Yes, so I think the person someone said that what will I be getting?
Cost of goods available for sale.
Cost of
Cost,
goods
Cost
available.
of goods available.
cost of goods available for Sally. So that is the
Say,
gas.
question.
Okay.
So say, please, you added purchases, carriage inwards, and then you less it from the return outwards, and you add it, and you get your cost of goods available for sale.
Yes, please.
Okay, thank you. Just wanted to verify.
Oh, okay. So now you get your what? Gas. The cost of goods that is now available for sale. The gas, right? Cost of goods available for sale. Now, this is not always the case, but sometimes it happens. Sometimes the owner of the business can say that, oh, or can take some of the inventory or stock and give it to his daughter that, oh, I've taken 100 pieces of the inventory or the stock to my for my daughter. You've given it to your daughter. So I'm sure once the person take the inventory balance in the business will no more be the same, right?
Yes.
Would the inventory still be the same in the business?
No.
No.
It will not be the same in the business, right? So what do you think we should do?
You less
Less.
the closing inventory.
We less the what?
Closing inventory.
We less the closing inventory. No, I think I'm not talking about the closing inventory.
Less the drawings. Drawings.
Yes, it will affect our drawings. Yeah, but it will also affect our income statement as well. Drawings for personal use, yes, I know that it will affect the statement of financial position. But once the person takes it can also affect our. It means we have to reduce the inventory balance. So less goods withdrawn, right? That is what I want to hear. Goods withdrawn,
Okay.
right? Less goods withdrawn by the proprietor for personal use, right? Whatever we get still remains, right? Then we deduct the inventory, closing inventory or the closing stock.
So I don't understand the less goods withdrawn.
Yes, and I'm saying that sometimes the owner of the business can say that, hey, the business is for me, it's not for anyone. So I have the power to take some of the goods. Hey, Kwame, go and take 100 pieces of the goods. So you see that the person can go and take 100 pieces of the inventory. And I'm asking, do you think the inventory in the business will still remain as it was?
No.
It will not be the same. Therefore, it will reduce. So on that note, we have to reduce the inventory we have in our business, right? So that's why we are deducting it. We are deducting the goods from the what? From the inventory to know the true inventory we have in the business. I don't know if you get it now. Do you get it? Hey, who is that? The one who said she's not getting it. Who gets it now?
Yes.
Okay.
And I was breaking, so I couldn't hear anything.
Oh, sorry. Don't worry. The video will be uploaded so that you go and watch. Okay. So now we deduct our closing inventory, right? Closing inventory. And even with the last goods withdrawn, you can even deduct it here before you get the available, right? Anyhow you do it, you should be getting the same answer. So we deduct the closing inventory or stock. Once you deduct, what are we getting?
Cost of sales.
Cost of goods cost of goods sold. Cost of goods sold. Now, this is the cost. This is the cost that we have now. So this is the one that we have now to sell. Look at this. This is what is in the warehouse now. This is what is in the warehouse now. Now, they are saying that the remaining is what? Is now this amount. What do you think the difference would be? Is it actually the cost of goods that have been what? Sold. If when we were starting the business, once we deducted everything, we added the opening inventory, we deducted the goods that have been withdrawn by the proprietor, we are getting 12,000 remaining. And now it's after selling everything for the whole period, for the whole year, we're only left with 1,000. What is the difference? What would be the name for the difference?
11,000.
The difference will be 11,000. But I'm saying, what is the name for the difference?
The cost of the goods sold.
The cost of goods sold. We have 12,000 goods to be sold, and they are telling us the remaining is 1,000. Closing inventory. Closing inventory is the remaining inventory or remaining stock. It's 1,000. It means that we have sold 11,000. So we have sold 11,000. We never catch say we sold 11,000. Because if in the warehouse when we are about to start selling, we said friend is saying, Kojo, go and check the warehouse. How much do we have now? So we are having 12,000 worth of goods. Oh, okay. But so now 12,000. Now after you've sold everything for the whole year, for the whole period, you ask Kojo, Kojo, go and check the warehouse again. How much is remaining? Oh, it's remaining. We are left with 1,000 cedis worth of goods. Oh, okay. So it means technically we have sold 11,000. That is the cost of goods sold, right? That's the cost of goods sold. So that is the cost of goods sold. So now that you have the cost of goods sold, if there is wages in the question, direct wages, right? We add the wages to the cost of goods sold, and we are getting the cost of what? Sales. We are getting the cost of sales. So let me even use red pen for this. So assuming there is no wages, that is a direct wage, it means that we are going towards the cost of sales is the same as cost of goods sold. If there is no wages, cost of goods sold is the same as cost of sales. And if there is wages, you add the wages to the cost of goods sold and get the cost of sales. So, ladies and gentlemen, this is what we want. We are done with the preparation of the CP. We are done with the preparation of the word CP. We started with the SP. Less is here. Now we are done with the CP, right? We are done with the CP. Let me use red pen for the net sales. Right. So now SP minus CP, net sales minus the cost price. Here the cost price is the cost of sales. So what is the cost of sales? Cost of sales, what are we getting for that? It means that we are getting this amount. And this amount is known as what?
Gross profit.
Gross profit or gross loss. Gross profit or gross loss, right? Gross profit or gross loss.
Boss, please question.
Okay.
With where we added the
If you
wages.
can't say
With where we added the wages.
Yeah.
Way back in high school, sometimes you don't see wages and then you see something like warehousing expenses or something like that. How do you treat that one?
Warehousing expense.
Yes, please.
Warehousing expense. Okay. So now the whole thing is about trading profit or loss accounts, right? Trading profit or loss account. So the trading part is up to the gross profit, and then the profit and loss would follow downwards. So here the trading part ends here. This is where the last part for the trading. And then the profit or loss continues from there. So the trading part looks at any direct cost, right? Any direct cost that is related to the what entity. That is what's related to the entity. But any indirect expenses or maybe indirect expenses, yes, would come to the word P&L. So warehouse expenses, I think sometimes the question will give a clue as to whether it should, because this is not a common item, right? It is not a common item that you would know whether in general warehouse expenses should go to what's the name? It should go to the trading part or it should go to the P&L, profit or loss aspect, right? But warehouse expenses, someone can send it to expenses to give a reason for that. So sometimes some items are not general items. Something like wages, which is a direct wages, that one is related to the trading directly, right? So we bring it directly to, but you can see a wages question too, and they'll tell you one fifth goes to friend is saying it's in the, what's the name? Does not relate to the direct expense, but it relates to operating expense. They'll give you a clue or information to tell you that the wage is one fifth. It means the remaining is for the direct. So the warehouse expense, if warehouse is, it depends. It depends on, I can't give a general answer that anytime you see warehouse expense, it should come here or it should go to the expenses.
Okay.
So where did they treat it?
I think it was always part of it was a direct expense. So just
Oh,
like the
okay.
direct wages, warehouse was also added to the cost of goods sold. But then I don't know
Okay.
if there's any question in the university like that.
If there is what?
I don't know if in the university there's any question that would have anything like that in it.
Anything like warehouse expense.
Yeah.
Oh, so far I've not seen, being in the university and teaching for about 6 to 7 years, I've not seen any warehouse expense. You see, the warehouse expense, that's why I say that it's not a general thing. It's an accounting there that you can get some other transactions which are unique. Even the exams, we can teach you the general format. You go to exams, you see a very unique transaction. That doesn't mean that it's a general warehouse expense. It's not a general thing, but as you are saying that, because that's why I gave you a clue that trading, anything is direct expense, and you said that it should be according to this one, it is a direct expense. So once it's a direct expense, then it comes here. But once it's a normal expense or an indirect expense, then that one it will go to the operating expense. But I've never seen anything like warehouse expense um for the past years. Maybe if I'm here to see that warehouse expense, no.
Okay.
I also went to senior high school. Would I say that I've not seen warehouse expense in senior high school? Yes, so it depends on which book you are using and which lecturer you are using, or which teacher you are teacher is teaching you. That one, because I've also not seen warehouse expense added to the trading part or the cost part. Any other question? Yes, any question? Hey, I'm expecting a particular question, but none of you, I don't know whether.
Yes, definitely. Please, I want to ask a question.
Okay.
Yeah, when we are doing this work, we normally have workings that we will do. So let's say, is it compulsory to come and calculate the net sales in the trading profit and loss account, so you can do the workings at a different place where you have been doing your workings. Then after that, you carry the net sales figure and put it in the trading profit and loss account and make reference to the workings. Is that all also advisable? Is it allowed there?
No, no, please. You show it on the face of the financial statement. This is like a general format. Oh. This is a format. So here you don't do some workings here. You don't do like so you go and do the workings and bring like working number one. Bring the final figure here. Ignore the sales less revenue. Less returning what? Is that what you are saying? You go and you deduct the returning was as from the sales as a working. Then you bring the final figure here. Is that what you are saying? Hey, is a person here?
Yes, I'm here for only the purchases. So I mean for only the purchases. Like when you take the purchases, then you less the return the return outwards. Yeah. So because during one of our tutorial sessions, the TA date that it's not compulsory to come and then record it over there at and you can do the workings anywhere. So when you come there, when you do the next thing, then you just write the workings number in which you have done it.
At your level, I don't think it's prudent to do that. At your level, nah, it's not prudent to do that. It doesn't spoil anything, but you show it on the face like this. This is a generic format. It's a format that is there. That add purchases, add carriage in what? Less return out what? You get the net purchases you. And so if you decide to put it under workings number, you do your workings number 1. It is still correct, but anyway, that is one particular TA, right? And not all the TAs. Thank you. It is not wrong, but it is. You can do this too. Let me say you can do this too, right? But this is what marking scheme, guys. If you check marking scheme, I don't think you will not see workings. Maybe you do this working somewhere. No. You present it like this. So that's why it is not wrong. I'm not saying it's wrong, but you can do this one too. Thank you. So any other question? All right, so I was expecting a question like, wages, is it not the same as salaries and wages? But it seems you already know, so let's proceed.
No, sir, I don't know.
Please, I
Sir,
don't
please
know.
go over. I don't know. Explain it, sir.
So the wages is a cost, and then the salaries and wages is an expense. Wages, the wages that I added is a cost, and this is the salaries and wages, or wages and salaries. Wages and salaries is an expense. That's what they are saying we should do. All right. Why? Because the wages is directly related to the product, right? Directly related to the product. But salaries is like what they are token for working with you, right? As an entity. So the wages is like, you see, when you bring the goods from your supplier, right? You see that when the goods maybe you brought cargo, once the cargo gets into the business, you see that you look for those boys that are around. Yeah, oh boys, it's gonna be a pile how Mumbra, come and let's offload this cargo. Once they help you to offload all the goods from the cargo into your warehouse, you see that you give them some token, you give them some money. Oh, please, you can take 100 cedi, 100 cedi, 100 cedi. You give all of them 100 cedis, 100 cedis. So that money you are giving them is what we refer to as the wages, right? It is directly related to the product. So it is a cost. We say that they say that we should treat it as a cost because you are giving it directly to the boys. Oh, the boys who helped you offload the goods from the cargo car. So you giving them that amount is known as the wages. But the salaries and wages is the money you give to your employees at the end of the month. So usually we say that the wages is on daily basis, or sometimes weekly basis, whereas the expenses is on monthly basis. So once they work, the money you give to your employees at the end of the month, you give them their salary. So that is to be treated as expense, and then this wages is to be treated as a cost. Are we clear?
Yes, sir.
All right, so now we are done with the trading part. Now let's come to the profit or loss part. It's a continuation. So we said gross profit. We've gotten our gross profit, right? So, ladies and gentlemen, We are done with the gross profit. Can you see?
Yes, please.
You can see the gross profit. Hey, the equal to. I'm sure you can see the equal to too. What is the equal to? The equal to is this bar. Can you see the bar, the equal to? Okay. We have to our incomes. Incomes. I can- So if the I then percentages of items at the beginning of the list. First items we have. Hey, you don't know okay, so silence is one of the incomes, right? Silence is one of the incomes. What else?
Discount received.
Okay, we also have discount received. What else?
Rent. Rent received.
Commission
What
received.
else?
Decrease in provisions.
Decrease in provision. Okay, I'll write that later. And what else?
Commission received.
Commission received. What else?
Interest in investment.
Interest on an investment. Interest on investment. What else? And many more, right? So decrease in provision will also be all right. So what is provision? Provision is setting money aside to cater for what? Any possible loss that may arise, right? So doubtful debt is a debt that it may not be what uh, collected, right? So you're having some debt that some customers they've not paid you. It is likely that they may not pay you, right? So that is a doubtful debt. Now you are making provision for doubtful debt means that you are setting money aside out of your profit to take care of any possible debt or any possible loss that may arise, right? So if your profit that is there, you are taking some of this it as what? You are putting some aside that, oh, let me put this money aside to cater for any loss that may arise. Money that you have made, and you have to invest that money to earn profit, to earn more profit, to invest in other businesses. You are taking the money, keeping it aside that if any possible loss arise, you are going to use that money for it. So you see, we are saying that if you use more money, if you increase more money, they are saying that we should treat it as an expense. Because once you are using more money that you could invest it and get more return on it, you said no, you are using it to cater for losses. But if you decrease your provision, you decrease the money that you are going to use to cater for other losses, it means that it is it is like a gain to us, right? It is like a gain to us. And they are saying that because it is a decrease, we have to treat it as what? As other incomes, right? It does not necessarily mean that you are earning money, like physical money, physical gain. But once it decreases, we assume that then you get more profit, you get more money to invest in other things that will generate more returns, right? So that's why a decrease in provision is an income. So an increase in provision would be what? An expense. Hope you understand.
Yes,
Yes,
please.
please.
What else? What else? And many more that may arise, right? Okay, so let's proceed. Now we are done with what? Other incomes. We are done with what? Other income. Now we move on to less. Less what? Expenses. Less operating expenses. So we are here. Less operating expenses. Any operating expenses that is not directly related to the trading. So less operating expenses. Less operating expenses. Operating expenses. Now, what do we have under operating expenses? You have your wages and salaries. You have your wages and salaries. So now, what the name given here can be the gross income, the gross, the total income, right? The total income, wages and salaries, wages and salaries. What else? What operating expenses do you have?
Selling and distribution expenses.
Discounts allowed.
Selling and distribution, expenses. What else?
Administrative expenses.
Someone said discount allowed. We are allowed to our customers. So once someone is supposed to pay 10 cedis, and you said, oh, I'm giving you a discount, so you pay 9 cedis. Sorry, the person is supposed to pay 10 cedis each, but you allow the person discount, and you tell the person, oh, pay 9 cedis. That one CD on it is it's an expense to you. That one CD that the person is not paying is an expense. So that is a discount allowed. You are allowing the person discount. You the business, we the business. So that is an expense. What else?
Carriage outwards.
Carriage outwards. Carriage outwards. Right. So carriage outwards. What is carriage outwards? The one who said carriage outwards. Is what? Condo. Did I hear condo?
Sir, they are the costs incurred on like sending the goods back to the supplier.
So if the cost of sending the goods back to the supplier, so carriage inwards was is a cost, but then the carriage outwards is an expense, right? Cost of transporting the goods into the business. Now, in the delivery, the car that you take to return the goods is known as the carriage outwards. You want to return the goods, that the faulty ones, you want to return it to the supplier. Though the expense that you incur in returning it to the supplier is the carriage outwards, and that is treated as an expense. That is treated as an expense. What else?
Can you say maintenance?
Maintenance, repairs and maintenance. What else?
Rent.
So that means it should be rent paid. What else?
General
Bad debt.
expense.
Lighting and heating.
Sorry, lightning
And heat. No.
and heating. What else?
Bad
Office
bad debt.
expenses.
Bad debt, 𝒂𝒂𝒏 and the
Insurance.
sometimes. Yes. What else?
Insurance.
Insurance.
Insurance. And also, so as and when you solve a question, you will see
General expenses.
general expenses. And so it means any other general expenses.
Office expenses.
Come again.
Office expenses.
Office expenses.
And the increase in doubtful debt.
So
The increase in provision.
increase in provision.
Depreciation.
Usually, I always want to put depreciation at the last. So it means that after depreciation, don't say anything again. So it means you are getting our net profit or loss. So I'm sure we are done with our format, right? It's equal to net profit or loss.
Sir,
Yes.
please, I thought when we get all our expenses, that is going to be the total expense. Then we less it before we get the net profit.
However, hey, and I'm the sentence. Okay, so the total expense we deduct it from the gross income, right? Thank you. So what is the total expense? Total expense. Total expense is this. Deduct it from the gross income. What are we getting?
Net profit.
So the net profit or loss. So if it is a profit, positive. If it's a loss, in brackets. Right? Same way as the gross profit and the gross income. Right? So all right. So this is the format for the income statement. We are going to look at the format for the. Hey, the format alone is taking all the time. Yeah, because you have to know the format very well. That's why I could have just written down, write the formula and then go away. Then we take a question, but it's prudent to understand format than to solve one question or solve. If you don't understand format, once you go to the exam, so they change something small, you cannot even start. There's one particular question in, I think that's second semester. You do an adjustment before you start the question. Once you start wrong, everything is wrong. Forget. So maybe the second semester, when you are dealing with the, I'll bring that one too. Once you follow the normal format, you are wrong. You have to do some adjustment before you can even start the question. Mm-hmm. This is university. This is not senior high school. Okay, so now let's look at the statement of financial position. So under the statement of financial position, here we would like to look at the position of the business, the position of the what of the entity, right? Looking at the company's assets, looking at their liabilities, and equity, right, which is the residual interest, right, at a particular what point in time, at a particular what point in time, right? So we want to know the position, whether the company is having more liabilities than the what, than the assets, right? So the position of the entity is what we are looking at, the financial position. Oh, they're in a strong position, right? Oh, they're having more assets, right? They know that, oh, they are doing well. But if they're having more liabilities, no, that's the question mark, right? So you basically follow the accounting equation that we have learned. Accounting equation. So what is the accounting equation?
Assets is equal to liability plus equity.
So we know that assets is equal to liabilities
plus equity.
plus equity. So asset is equal to liabilities plus equity. So this is the format that you are coming to follow to prepare the statement of financial position. To prepare the statement of financial position, right? All right. So with this, what is? Can we say that this is the accounting equation? Can we say from this that our assets minus the liabilities is equal to the equity? Can we say this?
Yeah. Yes.
We can say this, right?
Yes.
Yeah.
Okay. So if we can say this, then this is our format for the statement of financial position. We have assets. How many types of assets do we have? It has been grouped into what? Two. What are they?
Current
Non-current,
And
non-current, and then current. Non-current and then current assets. Right? Non-current and non-current assets. Right. So this non-current and the current assets. Then we come to liabilities. And the liabilities too has been grouped into two, right?
Yes.
What are they?
non-current and current liabilities.
We have current liabilities and then non-current liabilities. Then under equity, what do you have? Non-current equity and then what?
No, please.
No.
Oh, okay. So we don't have non-current equity and current equity.
No.
Oh, okay. Thank you very much. All right, so this is basically the format. So we are going to start with our non-current assets. Then we come to our current assets. Once we come to our current asset, the next thing will be current liabilities. Then non-current liabilities, and this should be equal to the equity. So here we'll be looking at capital employed, right? So in between the current asset and current liability, we have a minus here. We have a minus, so we can say current asset minus current liabilities. Current asset minus current liabilities, and that will give you your current equity, or what is known as working capital. Asset minus liability is equal to what?
Equity.
Equity. So if I'm having current asset minus current liability, can't I say current equity?
Yeah.
I can say current equity, right? Or current capital. So that is what we have been saying as what working capital, right? It is the capital that you have to do your daily operations, your day-to-day operations, right? So once you get to level 300, you'll be doing working capital management. Okay. So this is basically the format. So let's go through it. So we are going to use the net asset format. The net asset format. When you get to level 300, I will be using the total asset format, especially. But here I'll be using the net asset, right? So format, statement of financial position. So we have statement of financial position as at maybe 31st December 2024, right? So here it is as at, but the income statement is income statement for the period. So that is income statement for the period. For the period maybe 31st December 2024, right? So this one is for the period, but this one is as at. So it means the statement of financial position looks at cumulative figures. So it could be that other cumulative figures from 2023 would be embedded in the financial position. But when we look at the income statement, it's just for 1 year, just for 2024, January 2024 to 31st December 2024. Any other item in 2023 will not affect the income statement. But with the financial position or the balance sheet, it takes cumulative figures. So it can have figures from previous years, right? So that's what I'm saying as at this period. It means other balances from previous years can be included in that. That's why you can have accumulated depreciation. Because depreciation from previous years is sometimes added to it. But in the income statement, you cannot have accumulated. You can only have depreciation for the year, for the 2024 only. So let's quickly look at that. Let's look at the income statement. So we have cost, accumulated depreciation, and the net book value or the carrying amount. Carrying amount. Net book value or carrying amount. So what are the non-current assets?
Land and building.
So we have land and building. We have the cost. So land at your level. What do you know about land? Yes. What can you say about land? Those who read accounting. Sorry?
It is appreciable.
Hello, come again. What did you say?
It is appreciable.
It is appreciable. Oh, okay. So what does that mean?
Its value appreciates over time.
Oh, okay. So you mean that it does not depreciate, right?
Yeah, does not depreciate.
Yes. So we know that land does not depreciate, but building depreciates, right?
Yes.
Building depreciates, but land at our level, we may say that does not depreciate, right? But
Yes.
building, because if you go and buy a land at Amasamai, maybe you bought it 1990. Do you think the price will still be the same in this current 2026? It will appreciate. The price will appreciate. That's what I'm saying. The land does not depreciate. It rather appreciate, not depreciate. But the building, if you you build a mansion in 1990. Do you think that the condition of the building will still be the same as at now? It will not be the same as at now, right? So that's why building we say depreciation. So in fact, this depreciation here is relating to the word building. It's for the building, right? It's for the building. But I can say that some land will depreciate if you have been given a useful life for it, right? It depreciates if it has over 8 useful life, but in general it doesn't depreciate. So in fact, it doesn't depreciate. Let's go. It doesn't depreciate. What else?
Plant and machinery.
Plant and machinery. Depreciation. Then you get a net book value. Please, you deduct the accumulated depreciation from the cost, and you're getting the net book value. What else?
Motor vehicle. Fixtures and fittings.
Motor vehicle. Hey, this thing, they should arrange it in a very land and building, plant and machine, motor vehicle, fixtures and fittings. So let me bring fixtures and fittings. Let's see. So fixtures and fittings. So fixtures and fittings is the wardrobe that you have in your various halls or the hostels. The wardrobe that you keep your clothing in. And also the wooden beds, right? They are all fixtures and fittings, right? It can be used for more than one financial year. We said non-current asset goes beyond one financial year. So that is. What else? Motor vehicle. Sometimes long-term investment. Investment, which is a long-term, can be a non-current asset, right?
Computers.
Does it sometimes depreciate? Investment, would we say investment depreciates? So if they give you a depreciation, then you use it. If they don't give you the depreciation, don't use it. What else? Computers, okay, and many more. So there are many more. In exams, don't worry yourself to tally this one. You not use it. This one's the cost, you not use it. Accumulated, you know it. What you use is this one, this figure. So you continue with this figure away. You leave this one, there is no time. Then, so now we are done with the non-current portion. We are done with this portion, the non-current assets. What is the next thing? What is the next item?
The current liability. Current asset.
Hey, I think current then. Is it current liabilities or current assets?
Current asset.
You also said they can't hear me. Can you hear me now? All right, so current assets. So current assets. What are the items under current assets? I think we did this when we were doing the accounting equation, right? So you see, so that's the reason why I wanted you to understand it there. When we come here, we are not coming to say this is this, this is that. So what are the items under current assets?
Inventory.
Inventory or stock. And of course, this inventory is the closing one, the closing inventory. So inventory will be here. What else?
Trade receivables.
trade receivables. So with the trade receivables, sometimes, I'm sure you know trade receivables, or another name for trade receivable is what?
Purchases.
Debtors. The debtors.
The debtors or account receivable. Account receivables. So, when okay, I think let me do that one as a separate thing. With the trade receivables, when there is bad debt in the additional information, it will affect the trade receivables. But if the bad debt is just in the trial balance, it will not affect the trade receivables. Anyway, I think let me do a separate additional information note for you. So let's continue. If there is any bad debt, it will affect that one. So let's just continue. We'll get there. We'll get there. We have to waste time on the format so that you understand the format better than solving 1-2 questions and you think you're okay. No. All right. So trade receivable. What is next?
Prepaid
Cash or
expense.
bank.
Bank or cash.
What else?
Prepayments. Or prepaids.
Prepayment, prepays. Unconscious.
Prepaid expense.
So prepaid expense. Prepaid expense. If you are owing electricity bill, that is my example that I've been using. You are owing 100 cedis. Every month you are supposed to pay 100 cedis. And you have paid 120 cedis. Have you paid more or less?
More.
You've paid more. The 20 cedis that is on it is for you. It is an asset to you. Why? Because they have not rendered the services for you. You are supposed to pay 100 cedis. So they've given you electricity of what? 100 cedis. Electricity worth 100 cedis. But you have given them 120. So they are holding your 20 cedis. But they've not given you 20 cedis worth of electricity. So you as a person or as a business, you can say that, oh, I have 20 cedis with ECG. Oh, I have an asset of 20 cedis with ECG. Yes. Until they provide you with the electricity, it is no more an asset, right? So it is an asset once you have paid more and they have not provided you the current. And once they provide you the current, it is no more an asset, but it will be an expense that you have incurred. So the prepaid expense, any other expenses that you have paid in advance. So insurance, prepaid, what other expenses do you know?
Rent,
What other
prepaid.
expense? Rent, prepaid, any expense prepaid. That's all. Prepaid expense. So it will be based on the question. If the question is talking about insurance prepaid, electricity prepaid, and the rest, that's what you do, right? And insurance prepaid, we deduct it from the expense, actual expense, and then we add it to the current asset. So it will come to the current asset here. Okay. What else?
Accrued income.
Accrued income. Accrued income. Accrued income. Accrued income. So accrued income is like you have earned 10,000, right? The income like you have accrued it. So 10 cedis. We will 10 cedis. Someone will give you 12 cedis and 13 cedis, 14 cedis. So you see, the summation of all of these becomes what? Accrued what? Income, right? Accrued what? Income. So they are supposed to pay you. They are supposed to what's the name? They are supposed to pay you 120, but they paid you 1 110. You can say you have 10 cedis with them, right? You have 10 cedis with them. The next month they are supposed to pay you 130. They gave you 120. So you are left with another 10 cedi. Accrued income, summation of all of these is an income, is an asset to you. Let's continue.
Bills receivable. Bills receivable.
Bills receivable. So it will be part of the trade receivables. Trade, anything about trade that is receivable, you are receiving it. Account receivable. So if there is bill receivable, it should be somewhere here. Or else, so these are the generic formats, right? This is the generic format or the items that must be in the current asset. If there is any bad debt, so any additional information adjustments, I think we'll talk about that. So we are done with the current assets. Current assets, we are done. Current assets, we are done. Now we have a minus here. Because of this minus, because of this minus. So I'm going to lesson. All right.
Please, for the non-current, you have 4 columns. The cost, the accumulated depreciation, the MBV, and the non-current assets itself. So for the current assets, do you do the same thing? Do you place a column for the cost, the accumulated depreciation, and the MBV?
It seems I can hardly hear you. I don't know if I'm the only one, but can you please come to your mic and speak boldly? Hey, is she talking that I cannot hear?
No, please.
You can hear me.
Yes, I can hear you now.
I was asking whether we do the same columns for the current assets, the cost, the accumulated depreciation, and the net book value.
Oh, no. We don't do columns for them. So that is basically the currency. We are following the currency to do our thing, right? So we are following the currency.
Thank you.
Does the currency come first before the Ghana cedi or Ghana cedi before the... I mean, does the Ghana cedi come before the cost, accumulated depreciation, or they come above it?
The Ghana cedi is above the cost.
Yeah, the currencies are above the cost and the accumulated depreciation.
Okay. So we have Ghana cedi. If it is dollars, you use the US dollars, right? So we have this. So we are following the friend is saying the Ghana cedi. So we are not writing under cost or accumulated depreciation, just like they are also under it. So we have, apart from the non-current liability, the rest we are following the Ghana cedis.
Yes, thank you.
Welcome. So current assets, current liabilities. What are the items under current liabilities?
Trade payable.
Trade payable. Or creditors, right? Or accounts was payable. Accounts payables. So let me bring that under the first currency. First Ghana cedi, sorry. First Ghana cedi. First Ghana cedis. What else?
Accrued expense.
The first one was prepaid expense. Here is accrued expense. So accrued expense, you are supposed to pay 120, which are 110. In the whole channel, 10 cedis in the whole channel. Yet you are supposed to pay 130, what you are 120. 10 cedis in the whole chain, what with your accrued expenses. So that is a liability. That is a current liability. At the whole chain, so accrued, combining everything, and that becomes your current expenses. What else?
Short-term loan.
Short-term loan. So here we said prepaid expense, accrued income. Current, we're supposed to get to prepaid something.
Prepaid income.
Exactly. Prepaid income. So prepaid income is that you, the entity, so to ECG, the example that I gave, ECG, we gave them 120, but they are giving us 100 cedis. So ECG would never record this as an asset in his book, even though ECG has received 120 cedis from us. But they are only giving us an electricity current worth 100 cedis. ECG would never record the entire 120 as asset money received or assets, current assets. They only recorded the 100, right? But the 20 that is on it will be recorded in the what? Current liabilities. 20 cedis is not for them. Hey, Yaji will be 20 cedis. Yeah, man, the current here. If the 20 cedis not Yaji, until we give the person the current, then until we give the person the current, then it will remain in our books as current liability. What is a liability? Liability is an obligation, right? That you have to what? You have to perform. So if you have not performed your part of the obligation, then it means you still have an obligation to perform. So it becomes a liability, right? It becomes a liability for you to perform because you are yet to perform the liability. You are yet to perform the obligation, right? So the 20 cedis will be prepaid income. What is the cash when you ask it? It's just a then you cannot record it as an asset. You, the entity, you've received it. Once you received it, we can say because we have received cash. So let's quickly go and record it in that we have received an asset. No, it's a liability to us. It is a liability to us because we have not performed our obligation. So that is a prepaid income. We are just but we have not performed. So it becomes a liability. So they'll give you the expense and tell you it is a prepaid. No, I take it. All right. What else? And any other thing that may arise, right? Any other thing. So know that this is a short-term loan. No. Usually when you see loan, they are referring to long-term loan, and that would be non-current liability. But here it is a short-term loan. That is why we are considering that, right? If it's a very short, because current liabilities, that is why. But I think I'm not really pleased to bring it here because some of you might get confused. I saw loan here the last time. So no, that is a very short-term loan. But usually long-term, when they give you loan, always or usually send it to a friend is a non-current liability. Okay. Any question? If no question, we proceed. All right, what else? Then we are going to get our total, yeah? Then the total, we deduct it from the, so we are deducting the current liabilities from the current assets. Current assets minus current liabilities. We are deducting the total current liabilities. So total current liabilities that becomes our
working capital.
So working capital will be added to the non-current assets. Working capital will be added to our non-current assets.
So please, I have a question.
Okay.
Just in case you are given in a question, you find a bank overdraft in a question, how do you treat it?
Bank overdraft is a current liability.
Okay.
Bank overdraft is a current liability. We cannot bring every item here, but this is a general one. So as you solve plenty questions, you'll be exposed to even other things that you may not even have seen before, right? And the more you solve questions, you'll see some, hey, so I saw some word, if something like this, is it a liability, is it an asset? Then I will say, oh, okay, based on the nature, we can place it as a liability or the asset, right? So as you solve more questions, you'll be familiar with, or you see new things, right? Okay, so if you add the current working capital plus this figure, plus the non-current assets, the figure that we have for the non-current assets, this figure, if you add it to the working capital balance, what are you getting? This is one of the balancing figures. A balance, and balance here. In high school, they were making noise, a lot of noise. A balance and balance here. Have you been hearing them saying that, right? You didn't know one day you will also come here and do the same thing. Those who didn't read accounts, I'm sure you didn't know you will also come and do the same thing, right?
Yes.
So this is the net asset approach that I was talking about. But assuming it's level 300, I would add all assets. So current asset plus non-current assets. And now deduct all liabilities. So maybe just level 300, and I'm teaching you financial reporting. I'll add all the assets and deduct all liabilities. We don't have time to be, then the difference will be the equity and the rest, right? So that is the total asset approach that I was referring to. But with the net asset, we deduct the current assets from the current liabilities from the current assets, and you get a net asset, you get a working capital added to the non-current asset, you get a net asset. So this is the one of the balancing figures. Now we move on to finance by. So this thing in a way it relates to equity. This figure relates to equity. So finance by equity. Yeah.
Aren't we supposed to less maybe our long-term liabilities before we come to the finance by?
Oh, okay. There's also a format like that. Some people do less it from it. Others also decide not to less from it.
Okay.
Yes. So I remember previous years, sometimes I less it from it. When I get here, I less long-term loan. So long-term liability. When I less it the figure, then I get this figure. It means I'll not bring it here. But either I less it here or I add it here. Here I'll be adding it, but here I'll be lessing it. At the end of the day, we will not be getting the same answer. You may have 100,000 as your balancing figure. So 100,000, are balancing. You are correct. I may also be having 110,000. It is also correct. I balance it. Right, we are all correct. Once the two figures are tallying, it means the 1,000, 110,000, it has balanced. Just that you deducted the long-term loan, but I added it. So whichever format you are using, you should still get a balancing figure just that you will be having different balancing figure. But the two of them is correct, right? So the more you ask questions, the more you remind me of certain things I've done. Because this thing, me, okay, me, I've been doing it with level 300 and other things, but I mean, your level, it's been a long time, and I don't practice too. Me need time for practice. Even if I'm coming to class, I don't get time to sit down and solve questions. No. So once you ask more questions, the more you ask questions, the more you remind me of certain things that I'm supposed to say. I said that we get a question and then we treat it like that, right? So please, what else? So equity, what do we do next?
You add the net profit.
You add the net profit.
Net profit or loss. You may also get loss. So add net profit or loss, right? So here we bring it here directly. If it is a loss, it will be in brackets. What do we do next?
We less the drawings.
Less drawings. So drawings may be cash drawings, cash or goods drawings. You add the two of them, and you are going to less them here. What else? Add long-term
loan.
Long-term liabilities.
Add long-term liabilities. And that is what this. What else? So I think that is all right.
Yes.
That's like bank loan.
So the long-term liability is bank loan. Bank loan is also a long-term liability.
So please, mortgage.
Yeah, mortgage is also will fall under long-term liability as well. So at the end of the day, this figure here must be the same as this figure. Then we can say it as balance. The name given to this figure is capital employed. So for you to say that your account has balance, the net asset should be equal to the capital employed. Then you can say that, oh, my account has balance. Oh, my net asset is equal to my capital employed, right? And at the end of the day, it follows the accounting equation. Asset is equal to equity plus liability. Can you see that finance by having equity here?
Yes.
Can you see the equity and its item? Then plus long-term liabilities, which is a liability. So, and you can also see the asset, which is the net asset. You can see this asset is equal to what? It is equal to the capital, equity plus the liability, which satisfies this equation, right? So that is basically the format. Very simple and straightforward, right? So now the next thing is to take a question and we are going to apply all these formats. I've wasted so much time with the format, yes, because without the format here, you can do nothing, right? And the format will help you understand whatever question you are, no matter how complex the question is, just go by your format as it is. And here, I always tell my students, once you go to the exam hall, don't go and balance because there is no time. There is no time for you to balance, especially the second semester, which is level second semester accounting. That one, you'll be doing company accounts, you'll be doing manufacturing, you'll be doing partnership, all these topics. If you say you want to balance everything, I'm sorry. So I tried that during my time and second semester. I wanted to balance the thing. Because of that, one day, even I solved a similar question, or I think the same question. One question, I solved it, ditto, and I went and it was there. So I even knew the figures like offhand. So when I do this, I know the answer is this. I was just doing that. I did all of this, and aside that, other topics too, I wanted to balance it. Boy, about questions for me, that particular question for us, and it was too loaded. But we're doing ratios in addition to the questions were too much. Because once they said start work, I just wrote down. I didn't even like after writing my neck because I knew what I was doing. But because of time, I was not able to do finish certain things because I was trying to balance some of the accounts. I should have left it and go and do a full question or other things. So because of that, I had a B+ in accounting too, and it really paid me. Why should I get a B+ in accounting too? So that is it. So my lesson is that you don't just do it. Make sure you touch on every question. You cannot come out of the examination room and be like, oh, me, I didn't do question 5. Oh. The whole question 5, you are saying you didn't touch it. Hey, Bosu, are you serious? A whole full question. It's better you touch on each of them, right? You do the entries, yes. You don't even add them. Just write this, and that. Make sure you touch on all the 5. With that, you can pass. You can pass someone that is trying to balance and waste time. If it is not balancing, you will now go and check the entries. So say, only my dear. Who can say why you're accounting that? Only my dear. So you want to show the lecturer, you want to impress the lecturer that you know book. Okay. You see that someone that didn't even do accounting will get an A simple. Then you that did accounting. Do you know someone who read science had an A? On your A flat, I did business, but I had a B+. That is how sometimes if you are trying to show off, you just relax and learn and do your follow instructions. What I say, So that is it. So should we continue with a question? What's the time? 5. All right. So let's take
5.
Yeah. So let's look at one question. Can we continue?
Yes, sir.
All right. So
Okay. Below is the trial balance of 𝑭𝒊𝒏 Enterprise as at 31st December 2021. So we have capital at the credit side, inventory, debit side, buildings, debit, fixtures and fittings, debit, motor vehicles, also debit. Please, can you go up? Okay. Trade receivables and payables, debit. Okay, it's to debit and then the credit side. Advertising, debit. Insurance, debit. Salaries, debit. Provisions for bad debt, doubtful debt at the credit side. Rates, debit. Discounts, both debit and credit side. Returns, both debit and credit side. Sales and purchases, both credit and debit side. Electricity, debit. Bank, debit. Bank loan, credit. General expense at the credit side. And then we have the total there. So additional information. A. On 30th December 2021, they decided that 1,000 cedis of the receivables balance will be written off as irrecoverable debt
provision for doubtful debt is to be adjusted upwards by 200. D. Electricity bill outstanding amounts to 500 cedis and a quarter of the total electricity consumed relates to trading, whilst insurance premium paid in advance was 200. C. Goods withdrawn for personal use by the owner amounted 1,500. D. Inventory at 31st December 2017 was valued at 70,000. And E. Depreciation is charged on cost at the following rates: on fixtures and fittings 5% and motor vehicles 10%. You are required to prepare the income statement for the business for the year ended 31st December 2021 and the statement of financial position as at that date.
All right, thank you very much. So, of course, they cannot ask anything more than this at your level. So they ask for the income statement and then the statement of financial position. So once you know that this is the requirement, you have to get your format in your head first, right? You have to get the format in your head that, oh, okay, this is the format. This from this one, from this to that to that. So once you don't see what you want in the question, just jump it. So I told you that example is the return invoice and the rest. That it's not compulsory that the people will return the goods to the company, right? Maybe everything that they got was perfect, so they didn't return anything to the customer, right? Okay. Without wasting much time, let's proceed. Let's proceed. So I said I'll be explaining the additional information, but I didn't explain, right? But as we are solving questions, I'll be explaining them. Okay, so now, if you don't know anything, not the name of the entity, the name of the business. So from this question, what is the name of the business? What is the name of the business?
SOA Enterprise.
So
yeah.
So in the books of SOA Enterprise, underline, you get a tick for this, right? So if you that question you cannot do, just write this and leave your paper, right? Just write this and give your paper to the regulator. You just get a tick and getting 0, right? Okay. So now we have to prepare the income statement. So income statement for the year ended. What is the date?
December.
31st December 2021.
Yes.
Okay. So that is the income statement. So you can write this somewhere in your book. I mean on a question paper, just to guide you. The format that I gave you, right? So CP is equal to what GP, plus I minus E is equal to what NP or L. Not in your answer booklet, maybe on your question paper. Right. So what is the currency for this question? Every question and the currency they are using. Which currency?
Ghana.
All right. So you have to take note of that. Because if the thing is in dollars and you're writing Ghana cedi, it means everything you've done is technically what Wrong. Oh. It means it's 0. Because you are giving us in Ghanaian. It means you have done your translation from dollars to Ghana. At least it should tell you with that amount in dollars. But the rate that you'll be using there is up to you, because you know the rate that you are using. So you have to be very careful. The currency that you are using here, it is Ghana cedis, right? Now, so Ghana cedis. Now go and check the table and see whether you have 3 zeros on top of the Ghana cedis. Do you have 3 zeros?
No.
Do you have 3 zeros on top?
No.
No.
You can see debit and credit. There is no 3 zeros. It means that you can still maintain it. But if you check here and you see that there are 3 zeros, you have to bring the 3 zeros as well, right? Because if you don't bring the 3 zeros, it means that whatever you are doing, there is an error, because your figure will not be the same as what is in the table. Once you get a question like this, it is prudent that you just start from the beginning, like this, like how I'm going to do it. Capital, inventory, you just mention it on your lips, you mention it. Okay, capital, inventory, building, fixtures and fittings, motor vehicles, trade receivables and payables, advertising, insurance, salaries, provision for doubtful debt, rate, discounts, returns, sales and purchases, electricity, bank loan, general expenses. Once you do this, if you start working and you are looking for something, these items are not many, and you can get a question where the items are many. So you have to go through them. You mention them on your lips. Capital, inventory, buildings. If you start working and you are not sure if maybe you have something like that in the question, you'll be like, I remember mentioning this. Oh, I remember mentioning this. I saw this somewhere. Let me go and check. With that, you can just easily verify it. But if you don't check and you are just picking the items randomly, so you just come and pick electricity, now you come and pick bank loan, now you come and pick general expenses, then you leave. No. Some of the items you may skip them. It's likely that you may skip the some of the items. But if you start from the beginning, and when you are picking the items, to pick from the beginning, don't just enter into the middle and pick one. You go. Start from counting from the first item you see. That's the first thing that goes to whatever you are looking at. So let's quickly do that. So the first item is sales, right? Do you have sales in the question?
Yes.
Yes.
Of course, we should have sales, right? Now we can see that we have 80,000 and 150,000 and 50. This thing usually or sometimes confuse students. So they see sales, they see purchases. So they think that the first one is for the sales, and then the purchases is for the second one is for the purchases. But no, that is not the case. You have to know that what is the balance of purchases? What is the balance of what? Sales. Sales is having what balance? Purchases is having what balance? That is a question that you need to ask yourself, right? So now we have sales. We can see that we have the debit and credit. Sales, what is the balance for sales?
Credit.
Sales is having a credit balance. It's a revenue. So all revenues have credit balance. So it means that we are going to take the balance at the credit side. So what is the balance at the credit side?
150,050.
150,000 and 50. Right? That is the sales word figure. That is the sales figure. Now, what is the next thing under the sales? We are under SP. Let's return inwards. Right? It's coming to us. We the business. Anything that our customers return to us is inwards. Now, let's check. Do we have any returns inwards? We can see returns, right? Can we see returns?
Yes.
Can we all see returns? So the returns, we have, they didn't state whether it is return inwards or return outwards, but they've given us two separate figures. One being at the debit side and the other at the credit side. Which of them do you think is the return inwards and why? What is the balance of each of them?
Return inward is the 250.
Why?
Because return inward account has debit balances.
So return inwards is a cost, right? So it is having a debit balance. Return outwards, right, is having a credit balance. Return outwards is having what? A credit balance. Return outwards is having what? A credit balance. But where does the return outwards go? It will be deducted from the purchases, right?
Yes.
To be deducted from the purchases. So from here, we know that the return inwards is having a debit. Always know that return inwards is having a debit. So we are less our return inwards. So how much is our return inwards? Once we get this, we just find the difference. What is the difference?
149,800.
So this is our net sales. And I'm sure if you don't see sales and you see revenue, it's the same thing, right?
Yes.
So what did you get?
149,800.
149,800. All right. So now, this is our net sales. We are done with the SP, right? 𝒔𝒊𝒏𝒂𝒍 𝑭𝒂𝒏𝒂𝒍. Now, what is the next thing?
You left cost of goods sold.
We left our cost of salary or the cost of goods sold.
Eliezer.
Yeah.
Please, I wanted to ask if it is always advisable to calculate or do the workings for like the additional information before you start with your entries to know the adjustments and the other things.
Oh, okay.
Since some of them will be needed in the entries, so I think it's advisable to do the additional information first.
Okay. So that is good. So yes, did you even go through the additional information? Did you go through them? And the lady read, but I didn't go through. Okay. All right. So yes, sometimes the additional information do affect the entries here. But the reason, what I have observed is that usually additional information affects mostly on more occasions. I'm not saying that it doesn't affect the sales or the cost of it. Sometimes it affects from the operating expenses, usually the operating expenses. When you get to the operating expenses going downwards, usually. But the ones that usually affect this are the maybe goods withdrawn and the rest, right? But in the last, it's prudent we go through the additional information to see if there is any adjustment to be made here. Yes, but on more occasions, usually the sales, it is just the sales less returning was net. Then you get your net sales. If you take 10 questions, about 9 out of 10 would not really do adjustment for the sales. They will not really do adjustment for the sales. But it's still prudent. You don't know what the examiner is trying to do. Maybe he's trying to make the question very tricky, that particular section, right? So yes, it is good to go through the additional information. So that being said, let's go through the additional information before we proceed with the cost of sales or the cost of goods sold. Okay, so let me even explain the additional information one by one. So the readers will please read for us. Elizabeth, is the reader here? Okay, then someone else can take over.
A girl.
So on the 30th December 2021, they decided that 1,000 Ghana cedis of the receivables balance should be written off as irrecoverable debts. Provision for doubtful debts is to be adjusted upwards by 200 Ghana cedis.
All right, so here they have decided that 1,000 of the receivables. So when we get to receivable is under what? It's under statement of financial position. When we are looking at the current, is it
The current
current assets exactly? So current assets, receivables, they are saying that it should be written off. So once this bad debt, bad debt, when the bad debt is in the additional information, in fact, all additional information items will be treated twice. Note, you can write it in your notes. First thing, all additional information items will be treated twice. Where is it? All additional information items, NB. All additional information items will be treated twice. All right. So for bad debt, if the bad debt, you can add, if the bad debt is in the additional information here, bad debt, if the bad debt is here, it means it will be treated twice, right? If the bad debt is in additional information, and we can see that here the bad debt is in additional information, 1,000. They are saying that receivable should be written off as irrecoverable debt. That is the bad debt. Irrecoverable debt is what? The bad debt, right? The bad debt. So once it is in the additional information, it will be treated twice. The first one is it will go to operating expenses. Go to the operating expenses as an expense. The second one is it will be deducted. It will be deducted from the receivables. Deducted from receivables. Deducted from the receivables, right, under the current assets. So this is the treatment of the bad debt, right? This is the treatment of the bad debt. So let's continue. Once as we proceed, I explain, right, so that we can be able to solve at least one question before we go.
And the provisions for doubtful debt is to be adjusted upwards by 200 Ghana cedis.
Exactly. So provisions, we are saying that setting aside money to cater for possible losses, right? You are setting aside money. And say the increase in provision should be an expense. A decrease in provision should be an income because you are setting small amounts. Now, you'll be given provision in the additional information. You may be giving provision in the additional information and provision in the what? In the trial balance. This is called the trial balance, the table. This table that you are seeing. This table, no. It is called this table. It is called the trial balance table, right? So that's why at the end of the day, the debit side. So we did trial balance. If you can remember, we did trial balance, and at the end of the day, the debit side is equal to the credit side. So you be given provision in the additional information, and then provision in the trial balance. So the difference would either be an increase or a decrease. The difference will either be an increase or what? A decrease. So let's check and see if we've been given a provision. Note, and I'm sure you did academic writing too, right? You did academic writing, or you are doing it now?
We are not doing it.
Oh, okay. Some of you, I think, will do it in second semester, but you did academic writing 1. So if they say increase or adjusted, increase or adjusted to, and it adjusted by, you know the meaning. of these two words, right?
Yes, please.
So increase to means 400, increase to 500. The difference is the difference is what? Is an increase, right? The difference is an increase. But if they say increase by 100, it's the same thing as this statement. It has been increased by 100. Therefore, the difference is 100. That is the difference. So if they say increase by or adjusted by, this is the difference that you want. But if they say increase to from 400 to 500, so this question is saying that it is adjusted upwards by, it means this for 200 is the difference that we will be looking at, right? Adjusted by. And the statement is adjusted what? Upwards. So is it an increase or is it a decrease?
That's an increase.
It's an increase. Adjusted what? Upwards. So because it is adjusted upwards, it's an increase. Here we know that provision is what? An increase in provision. Because it said adjusted upwards by, assuming it said 2. We would compare what we have here and what is in the trial balance. And the difference becomes the increase or decrease. Right. Let's continue. B.
Electricity bill outstanding amount to 500 cedis and a quarter of the total electricity consumed relate to trading, whilst insurance premium paid in advance was 200 cedis.
You see, this is similar to what I was saying. Electricity bill, is it not an expense?
Yes.
Hello, class. Hey, ladies, I want to hear from you. It's like, are you tired? Electricity bill is outstanding 500. Where does electricity go?
Expenses.
Operating expenses. Operating expenses, you see, electricity as an expense. But look at the statement. A quarter. A quarter means what? Is it 1/4?
Yeah, 1/4.
Quarter, is it 1/4?
Yeah.
If a quarter goes to a quarter of the total electricity consumed, relates to trading. Relates to what? Trading. It means that it relates to the cost of sales, right? It will become to the cost of sales. And the remaining 3/4, the remaining 3/4 would go towards operating expenses. What I say. So that's why I said that sometimes they will give you a clue to what you are supposed to do. Because in general, I was saying electricity to what? As an expense, but they are telling me that 1/4. So I have to obey what they are saying. That is accounting for you. Obey principles. So that is why SNA will say obey simple instructions, right? Right?
Yeah.
Okay, sir.
Yes. Principles. Basic principles, basic instructions. Follow what the question is saying. You know the general formula that you are supposed to send it here. But the principle is saying that send 1/4 of it to this place. He said, no, that's not the format. You cannot tell me what to do. That is not the format. You cannot. The format says that expenses must go to operating expenses. Master, you can't tell me what to do. Oh, okay. We cannot tell you what to do. Oh, okay. Then follow what you know, right? Because that is what the question is saying, 1/4. You just obey simple instructions and do it as it is. Whilst insurance premium paid in advance. Advance means what? Advance. What is another name for advance?
Prepaid.
Premium. Prepaid. Sorry, it's not prepaid yet. Paid in advance. Insurance is an expense. So if insurance is an expense and it has been paid in advance, and we know that advance, so with prepaid or expense paid in advance, what do you think? When it's a prepaid, we deduct it less. The information are too much. Don't know how to. Time is also going. I wish I could break everything one by one. But when I look at the time, all right, so we less, when it's prepaid, we less it from what? the expense. So if you go to insurance, let's go to insurance. Insurance is what is insurance in the trial balance? Let's go to insurance from the trial balance. Please follow. Please follow. So where is insurance? Insurance. Insurance is what? 1,000. Can you all see the insurance?
Yes, sir.
Yes.
So then 1,000 insurance.
Yes, sir.
They are saying that insurance premium has been paid in advance. So note, NB, when an expense is paid in advance, so prepaid, when it's a prepaid, you deduct less. When it is accrued or accrued expense, I'm talking about expenses. When it's accrued expense, what do you add?
Yeah.
Right? So accrued, outstanding, another name is outstanding, another name is arrears. Let me add the synonym so that when you go, you don't see the synonym like, oh, but it didn't say this one. So synonym, accrued, outstanding, arrears. What else?
Owings.
Owings. Thank you. Owings. When it's owings, we add. When it's owings, we add. Right? But once it's a prepaid, we deduct. This will be in the income statement, right? But when you go to the statement of financial position, that one, it will be adjusted to the what? It will go to current asset if it is what? Prepaid. And then current liability if it is what? Current liability.
If it is owings or outstanding.
If it is owings or outstanding, right? Owings or outstanding. Owings. Because it's a liability. There is a current liability. But prepaid means you paid in advance. It is an asset to you, like how we talked about it there, right? So that is it. Then we have the goods withdrawn. Oh, okay, so we have goods withdrawn here. So goods withdrawn would even affect our cost of sales, right? And even the 1/4 trading. So you see, it is always good to read additional information first, right? It is always prudent to read additional information. Once you are done with this, come and read additional information first, and then we start the work. But usually the sales and the sales side, usually adjustments do not affect them. But anything can happen. Lecturers can try to make things a bit difficult for students now. They can try to now give you a working that may affect the sales. So please, it's prudent you look at the additional information first, and then because goods withdrawn is affecting that 1/4 electricity bill is also affecting that, right? What else? Inventory as at 31st December was valued at 70,000. Inventory at the end is always in the additional information. Inventory at the beginning, opening inventory, is always in the trial balance. Let's look at the trial balance. Can we see opening inventory?
Yes.
Yes, this is the inventory at the beginning, 1st January 2021. Go to additional information. Additional information, we have the inventory 31st December 2017. At the end, right? At the end, 31st December was valued at 70,000. Then we have depreciation is charged on the following rate on fixtures and fittings, motor vehicles. On that note, thank you very much. We can still proceed with what we are doing. So please remind me that we have 1/4 trading, 1/4 electricity bill, and then we have goods withdrawn, right? So that we don't skip that one. So look at a lot of final accounts, because final account that is the main question under in your exams, right? So we have to look at a lot of questions We'll solve a lot of questions on the final account. A lot of questions, so that you'll be familiar with other transactions that may arise. Okay. It could be that you may even see a transaction that me sitting here I've never seen before, right? You may see a particular transaction in a question. I have not seen it before, but I'll just apply my principles that I know. Okay. Now opening. So now we have, what is the first item and under the cost of sales?
Opening inventory.
We have the opening inventory. People are tired. Sure.
Very tired.
Opening inventory is what? You saw sociology. You saw information studies and the rest, archaeology and the rest. You said you want business admin. Let's continue.
60,000.
You don't leave the business admin for the account business people. So you want to do. Let's continue. Opening inventory is what?
60,000 cedis.
60,000. Okay. So 60,000. Should we leave have the currency, trade currency? Trade Ghana cities. What do you think?
Yeah.
I think the two work.
Sorry?
The
two will work.
Oh yeah, the two can work, but maybe you want us to use the three.
But the three will give more detail than the two.
Okay, sure. So you see. All right, so I'm bringing the inventory here. How much is the inventory again?
60,000 cedis.
60,000. All right, let's proceed. What is the next item? My format. Add what? Purchases.
Purchases.
Do you have purchases? Of course, you should be having purchases. Add purchases.
80,
my format. 20,000. Where is it?
80,000.
So that is
80,000.
it. Purchases 80,000. Let me bring it here under the first Ghana city. What else?
Carriage.
Let's return outwards.
Oh, there's no carriage.
The next thing is carriage outwards. Cost of transporting it into the business. Do you have something like that? Or they have free delivery?
There's no carriage in there.
Carriage in what? Carriage. All right. So once you go through, you see that there is no carriage. So if there is no carriage, it may mean that they had what? Some free delivery. All right. So what is the next item?
Let's return outwards.
So I jump the carriage and go to the next step. If they had free delivery. The return outwards. Do you have return outwards? Okay. So how much is the return outwards? Inwards we said 250. So the outwards will be 200. Yeah. What do you have?
You got net
79,800.
79,800. Is there any goods withdrawn?
Yes, less drawings, 1,500.
Where is the goods withdrawn? Is it an additional footnote?
Additional information.
Additional information. See, goods withdrawn for personal use by the owner amounted to 1,500. So we have to less our goods withdrawn. Right? Is it for personal use?
Yes,
for personal use.
All right. So for personal use, It means you have to less it, right?
Yeah.
Okay, so if you less it, what are you getting?
78,300.
78,300.
78,300. Mm-hmm. So where would the 78,300 go?
Under the opening stock,
You
the second one.
under the opening stock. You add it to the opening stock.
Okay, and what is the name given to that?
Net
The
purchase.
net purchases.
Okay, so the net purchases. All right. Where is it? Net purchases. MFA. So please give me the figure again.
78,300.
78,300.
78,300. You add it to this.
138,300.
Hey, did you less closing inventory?
It's not done that.
You will less it from the total of the opening stock and the net purchases.
Okay, so then 78 plus the 300, what are you getting?
138,300.
138,
300.
138, 300.
300. Yeah.
Okay, what else?
And we less the closing inventory.
Closing inventory. Okay, so closing inventory. So what is the name given to this? Is it available? Kogas.
Kogas.
Okay. Let's continue. So closing inventory will be what? Let's closing inventory.
70,000.
Okay, 70,000. What do you have?
668,300.
60 what?
8,300.
So 68,300. What is the name given to that? Cost of goods sold. And
Cost of goods sold.
do you have wages in the question? Cost of goods sold. So cost of goods sold is what?
68,300.
68,300. 68,300. Okay. Then what else? I think they said something about 1/4 something.
Yeah,
Electricity, right?
the quarter of the
Electricity
electricity consumed.
to be what? It is 1/4.
Yeah.
1/4 of the what? Electricity bill. So where is it? 1/4 electricity bill. Electricity in trading. That is 1/4 times how much is it? How much is the electricity bill?
500.
It's
2,000. Oh,
it's 2,000 in the
2,000.
trial balance.
So 5, 1/4. Let's see, how much is it?
2,000.
What are you getting? What are you getting?
500.
500. But they gave us an outstanding one. Let's add the outstanding. So add the outstanding 500 plus the 2,000, and then find the 1/4. So they are saying, because they are saying a quarter of the total. So it means, yes, total consumed. So it is the one in the trial balance plus the outstanding. So that becomes the total. So what that will be 2,500, right?
Yes, please.
All right. So 1/4 times the 2,500.
625.
625. 625. So what will be done to the 625? Oh, please add these two.
68,925.
682. What are you getting?
68,925.
68,925. Is that what you are getting?
Yes, please.
Oh, okay. So what is the name given to that?
Gross profit.
Hey, how gross profit?
Hey. No.
So that will be the cost of sales.
Cost of sales, eh?
That will be the cost of sales, right? So that will be the cost of sales. Where is it? So let me bring it down some more. So it says 60 what? 68. Come again.
925.
925. So that is our cost of sales. Deducted from the. Deducted from the what? So we are done with the cost of sales. Deducted from the gross profit. What are you getting? I mean, the sales, net sales.
80,875.
80,000.
875.
Please, some of you should be checking the figures too, because once it is wrong and it doesn't balance, you go and balance it in the house, right? So 80,000 what?
So please.
875.
875. 875. Okay. Someone was trying to say, speak. Is someone on the call? Someone is speaking.
So I wanted to know what we are adding to the cost of sales.
What you are adding to the cost of sales? No, we are deducting the cost of sales figure from the selling price, from the net sales. From the net sales. This is the net sales.
Okay.
You are deducting it.
Okay. Thank you.
You are saying 80 and 75.
Yes, please.
It's
Okay.
80,875.
875.
875.
80,000. 875.
8875.
Yes, please.
Okay, so that is our gross profit. That is our gross profit. What else?
Then we add other incomes.
Add other income. So, people are tired and they are leaving. Add other income. Yeah, you do that's a sociology and for that. All right, so other incomes. What are the other incomes from this person?
Discount received.
Discount receipt. Where is discount? They have discount. So you start from the top. Capital inventory, building, fixtures and fittings, motor vehicles, trade receivables and payables, advertising, insurance, salaries, provision for doubtful debt. We concluded that it was an expense, right? Increase. Was it an increase in provision? Okay, so then we skip that one too. Rate is an expense. Then so the next item is what? Discount. So do it from the top. And so if you are just taking it like that randomly, hey, you skip most of them because of the pressure on you. So discount received. What is the discount received amount? What's the discount received amount? Hey, discount received now. Really an hour. Hey, my people, are you there?
We are here. We are here.
Yeah, yeah.
Someone is saying something. Oh. Someone is saying something from the chat. Can someone read for me? Oh, someone should read this for me.
I wanted to
The person
know
is
the
saying that
difference
because some
between.
of the book drawings
Yes,
goes to the less operating expenses, so I was a bit confused when he left it there. Stephanie is the one talking.
she's saying that what?
From what she said, she thinks because some of the books drawings goes to the less operating expense, so she is a bit confused as to why less it's there.
You said some of the books drawings go to operating expense.
Yes, that's what she said.
Hey, really? How do drawings go to operating expense? Can you explain? Because I've seen something like that. But
Okay, so please, I'm the one asking the question. So I was
okay,
hoping one of the questions I was using Terrell.
okay.
Yes, please. And the drawings, they left it under the operating expenses. So when and all the time I've been solving those questions, anytime the drawings, they left it from the operating expense. So when you left it from this one under the, is it the trading or the P&L? I was a bit confused. Right now, I'm having a question which and the drawings, they are like they were letting it from the operating expense. Thank you.
Oh wow! I wish I can see the question and why they are lessening it. They are lessening the drawings. Is it drawings or goods withdrawn?
That's what I want to know the difference. Is it the same thing or please there is a difference between goods withdrawn and drawing?
Okay, so please, I think I explained drawings in class. So please, who can help us? She's asking what the difference between drawings and goods withdrawn. Yes, she's asking. Please, who is ready to assist us? Hey, where are the accounting people? The accounting students, please.
Okay, so with drawings refers to assets that are taken by the owner for personal use, or maybe money or anything that is taken out of the business by the owner for his personal use. And then goods withdrawn are the inventory that are taken by the owner for personal use. So we can say maybe goods withdrawn is a type of drawings, but specifically in the form of goods, not cash. So I don't know if you understand what I'm saying.
Stephanie, that is
Yes.
what he's saying. Does it make sense?
Please, can you go over it
I
again?
should go over. Okay, so I was
Yes,
saying that with drawings, drawings refers to any money or assets taken by the owner from the business for personal use. So with
okay.
the features of drawings, it reduces the owner's capital, and then it can be in cash or kind. Let's say it that way. But with goods withdrawn are the inventory taken by the owner for personal use. So with that one, we can say it is a type of drawing, but specifically in the form of goods, not cash.
Okay, thank you.
You're welcome.
So, Stephanie, from what you are saying, does it mean that we're supposed to um, apply the goods withdrawn 1,500 at the operating expense since you said you saw it in terror?
Please, now I thought the drawings and the books withdrawn, they are the same thing.
But what did you see in your terror? What did you see? Was it goods
Please,
withdrawn or it was drawings?
you see the drawings and the books withdrawn, that one, it comes from the owner. So I thought that he was using it for his or her personal something. Please, have you understood what I'm saying?
Not really. But what I'm asking is that in your terror book, no, you say they left it at the operating expense side. And I'm asking whether it is the drawings or the goods withdrawn.
It's a drawing.
It's the drawings.
Mm.
Maybe the drawings can even be. I'm sure if it is goods withdrawn, they usually state it's goods withdrawn, right? I don't know why they might have deducted it there, but sometimes it depends on the information given in that particular question, what they may have said. That's how accounting is sometimes. So that's why you cannot waste your time and go and balance in the exam, so and then we waste two time. Okay, go and balance in the exam, so here there we have to balance it because we have more time. So that is it. So that is principles that we are applying. So once you apply the principle, you are supposed to get we are supposed to get it. Okay, so let's continue. Thank you, Stephanie. So please let's continue. Now we are already tired. So discount received is how much? How much is the discount received? Discount received now. Is it that would be at the credit side, so 1,000? Hey, where are the students?
We are here.
Hey, please stop. My brother, please stop. Let's finish hard. And now you go and do the rest. Let me leave it to you so that you go and finish it.
No, let's continue.
Let's finish it.
All right. So this guy, is that the only discount? Is that the only income in it? Is that the only income? Let's continue. So add it. What are we getting? If you add it, what are you getting?
We are
81,875.
81,000.
875.
875.
81,875. So that would be our gross what's the name? Gross income, Anna.
Gross income, yeah.
Gross income.
Yeah. So gross income. All right. What next? Now we come to operating expenses. Operating expense. Less operating expenses. Operating expense. Operating expense, yes. What are the expenses from this question? Let's start from the top. Start from the top. Capital, inventory, buildings, fixtures and fittings, motor vehicles, receivable, payable, advertising. From the top.
Salaries.
Advertising. Any additional information on advertising? Let's go and check. Advertising. Additional information on advertising. Anything on advertising? Or advertisements? Anything on that?
No.
So what is the advertisement figure from the trial balance? If there is no information on that. Sorry?
1,000.
1,000. Let's continue. What else? Let's go to our table. The next thing is insurance. In order. Don't just speak. A bit far we need to exam pressure. Do not far we know what take it. So insurance is 1,000. Any additional information on insurance? Any additional information on insurance?
Yes.
Yes. Can we see additional information on insurance?
Insurance premium paid.
Insurance premium paid is what? 200.
Yes.
So when it's premium, what do we do? When it's premium, I mean in advance, sorry. In advance.
We less.
When it's prepaid, what do we do? We less. Yeah. So it is 1,000 less 200.
So
1,000 less, so 800.
Yeah.
What else?
Salaries.
Salaries.
Salaries near 45,000. Any information on salaries?
No, please. No information.
No information. Okay.
Yes, sir.
Ayo, and the interest. So salary 45,000. What else?
Rate.
Rate when rate the 1,000. Rate 1,000.
Okay. So the
Rate. Don't
provision.
you have any information on rate?
The provision. Sorry.
Rate. Any information on rate?
No, sir.
No information on rate. Okay. So the next thing is what?
So the provision.
Provision bound. Okay. So increase in provision, right?
I think there's additional information on that.
Yes, I think we have done that. We have already determined that it's an increase, so it's an expense. Increase in provision. So what is the increase in provision? I think we said it is 200. Increase by
There's 200.
increase by 200, right? Increase by 200. Check your rate in that, Anna. Before they reaching the rates. What else? Discount allowed, Anna.
Yes.
Discount allowed is what? 2,000. Discount allowed is having a debit balance, so it will be at the debit side. It's an expense, so it's having a debit balance. So it will be 2,000. Discount allowed. So you see, they'll be marking you correct, 6, correct. When you know one when your mask is here, right? So just enter the transactions as you see. Just enter them. You get a 6 for them. What else?
Electricity.
Electricity. Okay. Return out was okay. That is the cost. Electricity. Okay. Electricity. Electricity is now at 2,000. Any additional information on electricity?
Yeah, we calculated 1/4 of it, of the total.
It's
So we got the remaining. So 2,500 minus the 625.
It's an outstanding. Is it minus what? 625.
Yeah, the 2,500 minus the 625.
2,500. Okay. Okay. We've added it. 2,500 minus what?
625.
625. So the 625. Is it the 1/4?
Yeah.
Yes, please.
Okay. So we are deducting the cost part. It's actually 625. We have already used 62. It's actually 2,500. We use 625. So the remaining is how much?
1,875.
1,875.
1,875.
75.
Okay.
And
What else?
The bad debt.
Carboni. A carboni. So where is that bad debt?
Additional information.
Are we done with the trial balance? General expenses is there. What jump here? No.
Yeah.
So the way no go I think Kuba we dey say oh who can say why is the other. It's principles now. Follow just train yourself that if you're not done with the first step, you're not going to the second step, right? So just train yourself like that because you would get everything. So, general expense. Any information on general expenses?
No, please.
So that's 2,000. What else? And you say bad debt, Anna?
Yes, sir.
Yeah, the bad debt you say will be treated twice. Where is it? One in the trial balance. So where's the bad debt? 1,000. Bad debt will be treated twice if it is in additional information. It will be less from the receivables and it will be deducted from the operating expense as we are doing now. Okay, what else?
Then depreciation.
Is that all? Okay, depreciation. Depreciation should always be the last. Depreciation is on what? Is it? It's on fixtures and fittings. F and F. So what is the rate?
5%. And then
Straight line here. Straight line is just. So what is the cost for the F and F? And this is motor vehicle. That one is what? 10% times. Let's check the cost. Where is the cost? Cost no where is it? So building 120 and now building is what? Is it building? No, you're not. What? 10,000. 10,000. And the motor vehicle is what? 30,000. And
yes.
So
with the
I'm sure they are on straight line method.
Yes. With F and F we get 500.
F and F. Straight line, right? They are on straight line method. They didn't say straight line or reducing balance. Yeah. So if the question is silent, then we assume a straight line. And
is that charged on cost?
Yes. Did you say that? Okay. Charge on cost. Charge on cost means straight line. So 5% of 10,000 is given as what?
500.
500. Second one is given as what? Is it 3,000?
3,000.
Okay. Agbina. What else? Yes. What are we getting? So add them quickly. Fast. 20 students, you can sit down the whole day. Sure. You can sit down from morning to evening. It's normal.
58,375.
The total expense.
Yes, please.
Someone should also verify. 2 heads are better than 1. Sometimes. 58,375. 375. So that is what? What's the name? Total expenses. And
yes, total expenses.
Total expenses. Total expenses. Then now let's find our net profit or loss.
To 23,500.
Net profit or loss? No, it's net profit. The net profit is
23,500.
23,500. 23,500. Has it been confirmed? Is it confirmed? 81,875.
Confirm.
Yes.
It's confirmed then. Okay.
Yes, confirmed.
Then the next thing is to prepare our financial position. And which is whether we have done everything rightly or we have made an error somewhere. So statement, if you check and you have made an error, now we see our exam, so go and do it. Statement of financial position. So here too, you write the name of the entity. Books of Sawyer Enterprise. And this will be 6 because this is a separate book. This is a separate book. Statement of financial position as at, what is the date? December what? December 2021. Hi. People are exhausted though. The few ones are talking. Sure. All right, so we have the cost, the accumulated depreciation, the net book value, or the carrying amount. Hey, we are supposed to bring our
currency first.
I don't know where it is. Currency. Currency. So with the currency, we have the non-current assets here. I'm sure we already know the format. Other than that, I will say that asset minus liability is equal to equity, and I've already expatiated that already. So we are having our non-current assets. So that is the non-current. What are the items under the non-current assets?
Building.
Building. Where are you? Building. Where are you? Buildings. What did the amount cost for the building? Cost. 120. Depreciation. Sometimes in the question they can give you accumulated depreciation. So you have to add the current depreciation to it, right? They will give you a question, accumulated depreciation. Add the depreciation that we computed earlier, the current one, to the accumulated, to get the total accumulated, right? So depreciation is 500.
No.
A lot didn't depreciate, so 120,000.
120,000.
There was no depreciation with respect to building. What of fixtures and fittings?
10,000.
10,000.
And the depreciation is what?
500.
500.
500. So what is the difference?
9,500.
What else?
Motor vehicle.
Motor vehicle then 30,000. What's the depreciation? I think it's 3,000. So with the 3,000, what is the difference? That will be 27,000.
7,000.
Is that all? Yeah. That's all for the non-current. Give me the figure here. This one, when you go and compute. Give me the total figure here.
156,500. That is for the net book value.
156,500.
500. 156,500. Okay. Then we come to our current assets. Current assets. Current assets, no. Opening inventory. We start with the closing. Sorry.
Closing.
Here we do the closing inventory. What is the closing inventory? It is in the additional information. Closing inventory is additional information. It should be there. Where is it? 70,000. Okay.
Yeah.
So 70,000 will come here. What else? What else?
Is that trade receivables?
Trade receivables. Trade receivables. What is the trade receivables balance from the trial balance?
15,000.
Trade receivable, 15,000. Adjustment. You do adjustment to it. So if the bad debt is just here, we would have just treated it in the income statement and leave it. But if the bad debt is in the additional information, the bad debt is in additional information. Oh yeah. So far as they bring it in additional information, where it is 1,000, it means it will be treated twice. The first one is bringing it in the income statement. Second one is lessen it from the trade receivables. Let's hear free bad debt. Yeah, tear free a carbon. So deducting the bad debt figure, what do you have? The bad debt is how much? 1,000.
1,000.
Okay. What else? Then, if there is any provision for depreciation, the closing balance for the provision. So here, the provision for doubtful debt is to be adjusted upwards by 200. The 200 is the difference. You want the total, like the way I said that 400 to 500. The 500 is what we want in the additional information. Here, you add the 200 to the old one. If maybe the old one was 400, they say increase by 200. It means now it is what?
600.
600. If the old one was 400, increased by 200, it means now it is 600. Here we are going to take the 600 and not the 200. The 200 will be dealt in the income statement. But when we are looking at the current assets, we will take the closing one, the total one, which is the 600. So here, what is the provision for doubtful debt in the trial balance? Add the 200, and that will be the one that will be adjusted to the trade receivables. So do you have provision here? Provision for doubtful debt. How much is it?
500.
500. And they are saying it will increase by 200. So it means total we have 700.
Yes.
Provision for bad debt and doubtful debt. Bad debt or doubtful debt. So that is what the 200 plus 500. What do you have? 700. What else? So we are deducting all of these from so that you don't add them. So what do we have?
You have it. 13,300.
13,300.
13,300. Okay. So what is the next item? Any expense prepaid? Do you have any expense prepaid? Electricity outstanding? No, we want prepaid. Insurance. Okay, so insurance will come. Any expense prepaid, insurance. So prepaid, what do we do? In the income statement with less. Here we bring the insurance prepaid and figure as it is in the in the additional information. How much is it? How much is it? Insurance prepaid
200.
200. What else? Any accrued income? Any accrued income? Do you have any accrued income? There is no accrued income. Okay, then we go to our cash and bank.
Yeah.
Any cash and bank?
I think there's bank.
Oh, okay, so there's bank. Here is bank. I think there's bank here, 8,000. The bank too, if the figure is at the credit side, it means it is an overdraft. It will go to the current liability. Here, is it at the debit or is it at the credit?
Debit.
It's at the debit. So it is a normal balance, normal bank balance. Right? Bank is an asset. It's having a debit balance. So it will come to the current asset. Assuming the figure was at the credit side, it means it is an overdraft. Hence, we'll go to the current liabilities. Hence, we'll go to the current liabilities. Any cash? Do you have any cash around?
No.
Hey, why not?
No cash.
Sociology also count. So, hey, please, those doing the BS student, those doing maybe a course in sociology, I better go. I beg. Okay, so please, what is the total?
22,000. Hey,
22.
No.
Give me the total figure.
92,000.
Someone to confirm.
Wait. 92,000.
Is it confirmed? Okay, 92,000. What else? Then less our current what? So you can see we are following the format. We less our current liabilities. Less current liabilities. Hey. What is the current liabilities? Trade payables. Any trade payables? Trade payable, 40,000. Can you all see the trade payable?
Yes.
Yeah. Trade payable is 40,000. Yes. What other liability can we see? Additional information. Any owings, any outstanding, any arrears? Increase. Okay, I think you have already dealt the provision.
Bank loan.
Bank loan, however. Electricity bill outstanding. As far as it's in the additional information, with additional information, to always also start from the beginning. If you are picking items like as you see them there, you go over you, but do it from systematically from the top. Okay, I've already done this. The next thing is electricity bill outstanding. That is a liability so far as it's in the additional information. So electricity bill, electricity owings. What is the amount given to that?
500. 500.
500. What else?
Bank loan.
Bank loan.
What is a bank loan?
In the trial balance.
Hey, when they give you bank loan, assume it is a long term.
Okay.
Even the figure.
Sometimes I figure to, but on most cases, one will be a short term. But when it's silent like this, on a normal term, it should be a long term bank. Because they will give you the loan for more than 4 years, 5 years. Loan I'll go for 12 months. They within 12 months, live. All right. So bank loan will not come. What else? Goods withdrawn. What else? Inventory, depreciation. Okay. So we are done with that. So what will be the total?
40,500.
So the difference will give us what? Working capital.
51,500.
You got 51,000.
500.
51,500.
500.
Is it confirmed?
Confirm.
Yes. Confirm.
Okay. Working capital. Okay. So we add the working capital to the 156,500. What are we getting?
208,000.
208.
208.
208,000.
Yes.
Okay. So 208,000 as net asset.
Yes.
Yes.
Okay. What else? Then we move towards finance by on our finance by finance by what do you have? Equity or capital? Some books will say capital. I mean, especially the SHS. When you see the capital, okay, capital.
It's capital.
Okay, okay, okay. So capital, how much is our capital?
86,000.
86,000.
96,000. What is it?
86.
Sorry. Add what?
Net profit.
Net profit.
Add net profit. What is our net profit?
23,500.
23,500. Okay, what else?
Less.
If you add it, you get the answer, and now you can even ignore it. Less drawings. Were we given drawings from the question? I mean, from the trial balance?
No.
No drawings. Okay. Thank you. So no drawings, eh? All right. So I think the only drawings we do will be the 1,500. We would have added the drawings given plus the goods withdrawn. So since there is no drawings, then the only drawings will be what? Goods withdrawn.
Yes. 1,500.
1,000.
Give me the total for this.
100. Hey. 108,000.
180,000.
8,000. Okay, no, for the top
108,000.
If you are doing
So
for the
these
first
two,
two is
these two,
okay. The first two is 109,500.
109,500.
9,500.
And then when you subtract, you get 108,000.
When you subtract, you get 108,000.
Yes.
What else? Long-term loan.
Yes.
100,000.
$208,000.
Agbena.
Yeah. 208.
Eight.
A balance one. Have you balance?
A balance.
Mhm.
Capital
Aye.
employed.
So these are capital words. And balance, I can work with your balance. Share for you.
Capital
You and can you them go for balance? Me then can balance it there. Now I take it from you. It means you didn't give me the right figures. And you have to go and do your adjustment. Because the work of checking the whole thing again is not an easy work. All right, so this is how the income statement and the financial position looks like. Any question? If there are no questions, we pause here for today. And tomorrow, God willing, we may solve another question on income statement. And if there is time, we'll look at, or maybe Wednesday, we'll look at let me end the recording here, because it may be too long.